Here we go. We're underway. Good morning, good afternoon, good evening, traders. Welcome, everyone. Yes, Richard, let me just turn this music off. Here we go. Nice little bit of Dire Straits, if anyone likes Dire Straits. Yes, so this is I don't want to call it a bonus session. It does seem a bit odd doing it on a Tuesday morning my time. It's just that I pressed the wrong button last week and didn't record session 5. And of course, we've got 100 odd traders that watch the recording. So we're doing this for them. Murphy's Law. Oh, you missed that one. So there we go. No problem. So in today's session, as a reminder, we're going back over session 5. Now, I'm also going to do some additional things because it is a recorded session. I'm going to cover some PowerPoints that I've been skipping over or that we haven't had a chance to get to. So we will cover those in today's session as well. Either way, I think you all will learn something. Well, hopefully that's okay, Richard, or you're solving that issue, mate. I wish you the best on that. Okay, just checking everything. So as we get underway, we do need to pull up the disclaimer. There is a risk oh, good, excellent, Richard. So there is a risk in trading, and of course, my job is to minimize that risk as much as possible. Oh, one thing I was going to do for you, I actually, where are we here? I actually put on, let's see, is it gonna come on? Where are we? There we go. I actually put on a shirt for you today rather than a t-shirt. just to greet you all, to say good morning, good afternoon, good evening. So there you go. So I really am here. So I'll turn it off now. Here we go. So the risk disclaimer, feel free to read it. Now, this is interesting. One of our members sent me this little photograph, and you saw it a few weeks ago, of Mel Gibson. I'll never forget, I've got to tell you the story. Mel, of course, is an Aussie. So we were living in LA going back 8 years ago now, 10 years ago, and we lived in Santa Monica. And Mel's accountant is in Santa Monica, and we used to ride our bikes everywhere. My wife and our baby daughter, who's not so much of a baby anymore, we'd ride push bikes everywhere. Of course, we had cars there, but it was convenient. And we were riding past Mel's accountant, and who was there was Mel. I remember my wife stopping and saying, and it was about probably 50 meters away. My wife loves him, stopped and said, "Mel, we love you." I've never forgotten that. But anyway, what does a profitable day trading career mean to you? Freedom, traders. That's what it means, is freedom. Now, I know that some of you still have those psychological doubts that you're going to do this, but by hell, you're going to get there. You've got to have that determination, that burning desire, because I know that you can do it. And here's why. Think of it logically. As you've heard me say in the past, if one person can do something, he may be a freak or she may be a freak at it. If 2 can do it, it can be modeled, it can be taught. If hundreds can do it, you can do the same thing. Now, at times we need to break it down and discover why we're not getting the same sort of results, where we may be going wrong. And of course, a lot of the issues that we suffer from or are dealing with are a psychological issue, particularly if we've blown our account in the past or we have money pressures. Now, what I want you to remember is that your largest fears carry your greatest growth opportunities. By overcoming, beating your greatest fears, it basically means financial security for life. And why do we have these fears? Well, many of them come from, what if I can't do this? What if I fail? What if I lose money? What if? I don't want to sound like I'm being flippant with your fears, because everyone says, fears, just get over them. But they're not fearful at that time when they say that. Fear is real. So what are some of the steps you can immediately implement? Well, first of all, I really recommend you take the time, and I don't care whether and we've got a couple of 75-year-olds in the room. If you're 75, go on YouTube and watch. There's videos there on fear, overcoming fear. And yes, some of them, you know, a bit rah-rah, but there's some good stuff there. You need to work harder on yourself than what you do on your trading, because until you master your fear, you're not going to get there. Now, I'm not saying you won't always have some form of fear, because once again, fear keeps us safe, it keeps us alive, but we need to get it under control. I mean, and that's what really courage is, isn't it? If we think of someone that's courageous, it doesn't mean they don't get scared at times. It just means they follow through. And what's the saying? You know, the coward dies 1,000 cuts or 1,000 deaths, where the courageous one dies only once. Now, developing the concept of overcoming fear or dealing with your fear is a habit, and it takes a period of time, but you can do it. And that's why I encourage you to have your dream boards and your goals. And yes, I know you've got to be careful who you share them with. Maybe you've got to put them on the back of your office door or where you're doing the trading, so you can close the door and no one else, or when you open the door, no one else can see them. But when you've got a big enough why, the how will appear. Why do you want this? Why do you want to achieve a master day trader status? How are you going to get there? And I'll tell you how you're going to get there: by mastering trading with the trend. And the great news, I say all the time, like, it's not rocket science to do that. Now, last week we spoke about this in session 5, and I've got to stop reminding you, this is session 5. And this sort of thing for traders and the young guns gets them going, okay? However, Raymond was kind enough to do a little calculator, which we'll quickly look at in a moment, which you've in the end, you've got to find out what really works for you. Like, some people talking about the money can actually frighten them a little bit, where rather than looking at their bottom line, whether they're green or red each day, I want to look at so many pips or so many trades. Now, but just while we're on this, but how do you do this sort of thing? What's your plan? Now, whether it be 100,000 a year or 50, you've got to have that detailed step-by-step. Now, Raymond last week was kind enough to send through a calculator, which is in session 5's folder, just on where you put in your tick value, what your commission is, what your stop's going to be, what your daily target is going to be, and it basically will then tell you how many trades a day you need to be executing and profitable on. What your win-loss ratio is, 75%, 25%, whatever. You might want to put in there 70, 30, right? But it's a great concept where if looking at the bottom line, the dollars is a bit of an off-put, it doesn't work, look at the trade numbers. Once again, focusing on the process. Have a good look at that. And that leads me into another great movie by Mel Gibson, The Patriot. And in that movie, and I actually didn't know what it meant by aim small, miss small. And apparently a consultant to the movie came up and taught Mel Gibson. He didn't know what it was initially. And he basically explained to him what aim small, miss small. If you're aiming for a soldier, you look at shooting at his button. You just don't take an aim at the soldier. Likewise, if you're aiming for the barn, you might miss it. But if you're aiming for the door in the barn, you'll hit the barn somewhere. And that gets back to trading, is really focusing on the process, focusing on that one good trade. Forget the 10 to 20 trades you want to take overall for the day. At the moment, you're focused on that one trade. Just focus on that. And when you focus on the process for one trade, the results will take care of themselves. And with that, this is something we need to do regularly, including I do this regularly, because I look at so many things, and I look at so many things for members and clients, and I'll look at different indicators. And you know what? You can become, fuzzy in the head, fogged up. You can become overwhelmed with information. And I know with what I give you at times, you become a little overwhelmed, particularly if you're traders. So I want to encourage you to sit back and have some thinking time. It's funny, just yesterday, it's school holidays down under here in Australia, and Kiara, my 16-year-old, is in a school, what do you call it? A performance next week anyway. It's a play, and she's got a role in this play. And so during the holidays, she's still got to go to school a couple of days a week for practice. And so I picked her up after practice yesterday and driving home, and I don't even remember what it is now, but I thought of something. And as most of you know, I carry, and for new members, I don't think I've shown you this before, Brand, but the season members, I'm sorry, I just want to show everyone this. And I carry, as you know, most of you know, my micro cassette recorder every week. Now I know you can have your phone with you, but I just find it really easy, and you can see how worn it is from being in my pocket. And I think of something, and if I'm driving along in the car, I'll just put it on the micro cassette recorder. Now these things, and I go through about one a year, I'll drop them and break them, and they're only about $40 each on the internet. You can direct buy them, they're cheap as chips. This is a Sony. And as I think of something, and it was something to do with trading, I was driving back and I just, okay, I'll tell you what it was, and I've got it written down here in my journal. Read the 8 EMA trending, which we're gonna be looking at something I wanna show you today. And just something a member said to me, and I wanted to remind you just about easy to follow trailing the stop. Anyway, I was driving along and we were actually listening to a CD on something, and I thought of it and just put it straight down. And we do need, and I said to Kiara, I said, and sorry, and there's a reason for this story. I said to Kiara, you know what, honey, I said, quite often when I'm away from work, I come up with ideas or think of things which are relevant to work. And that's why they say we should all get some quiet time, some thinking time. And so your thinking time is to sit back, how can I do this better? How can I use this? What's great about this? We need to do that. Now, a lot of the things that we talk about, of course, are about habits. And the University of London, when they carried out the study on the habits, and they said, look, it was between 20 and 120 odd days to develop a habit. The average was $66, $66, sorry, 66 days. Let me take the dollar out. Don't know where that come from. Money on my mind. Okay, 66 days to change your life. It's a habit. And these are the things that we need to work on, developing the habits. And that's where putting pen to paper and writing things down. And last night when I retired, I was just reviewing a book by David Goggins, his book, the Seal, and he was just talking about how he would he believes post-it notes, and he said, you know, putting things down electronically, you know, in your a notebook and things like that, yeah, that's great, but he said it's not in front of you all the time. And he said he would put post-it notes everywhere and all over his mirrors. Well, I don't know if he used the words all over, but on his mirrors. So he would see them regularly. Now, all of these things are habits, so processes that we need to do and get underway. And talk about breaking habits. There's a little Word document that I've uploaded where if you've got the habit of impulse trading, is to print this out and tailor it. It's in Word, so you can tailor it to whatever wording, whatever is relevant to you, and you sticky tape it over your dome. And so before you can take a trade, you've got to lift it up and lift it up off the dome to see where your trade's going to go, where to go and click on the buy sell buttons. It's about changing your state, breaking your state. What we also discussed was really the conscious competence ladder. And this is where also having the concept of looking at mastering this in 90 to 180 days. In even maybe some of you might need to allow longer, particularly if you're working, you've got a full-time employment, you've still got a family, so you just can't put your whole life into this. But as you know, you need to become a student of the market. But you start off here, unconscious incompetence, and we build our way through. And once we get to this level here, where it's natural in what we call a blink of an eye, okay, we're becoming an expert, then we reach mastery. However, to stay there, That's the purpose of, like, we've got members here that have been here with me for 3 years in my coaching classes in one way or another. And the reason is to keep their skill set. And as I've had discussions with them, just that one idea every now and then makes it worthwhile for them, is that make sure we keep our education right up there. Now, a lot of the things that we do, and it was either Ali or Al, I think it really just triggered something. And this is something I'd really forgotten about impressing on people, was muscle memory. Developing our skill set. And this is why it's so important, traders. But you focus initially on only 1 or 2 trades, trading with the trend, your 34B and 2B, you develop the muscle memory. And in that excellent book called Blink, and I've uploaded the book Blink into today's folder, session 5, and into tomorrow's folder, which is session 7, for those traders that aren't here today and that might watch this session, is that about developing, in a blink of an eye, you can see a setup. Now, I tend to find if I've got interruptions or I'm distracted, it takes me longer than a blink of an eye. Yet, if I'm sitting there quietly, I can see a trade setting up in a blink of an eye. However, when I'm distracted, and that's why I say, and you've actually seen it, when I'm thinking, okay, would I take this? Let me just have a quiet time for a sec and think about it. Right, because I need to assess what's happening in the background, what's happening on the anchor charts, etc. And we develop that muscle memory. Now, muscle memory also comes down to physical muscles, how we ride a bike, typing on a keyboard, all of these things. And as it says down here, that muscle memory may last up to 15 years or possibly forever. So once we, for example, learn how to ride a bike, yes, if you're 80, it might be a bit wobbly, but you can usually get back on and ride a bike. And that's what it comes down to, developing that muscle memory as traders, wax on, wax off. I did a promotional video yesterday. It's for the general public. You'll probably see it if you subscribe to my channel. And the good news is there's no ads on it. But anyway, you might pick up an idea or two. But in there I talk about, and something that the seasoned traders have heard me talk about many times, is traders that say, teach me something new. I know that setup, yet they're not profitable yet, or they're struggling and they want to learn something new. Okay, it's so important, traders, that we wax on, wax off. And Jackie Chan there, I fear not the man who's practiced 10,000 kicks once, but the man who's practiced one kick 10,000 times. And as Linda Reschke says, some of the best traders she knows focus only on one setup. That's all they have, is one setup. Now, when it comes to learning how to trade effectively, one of the greatest challenges, and it was Raymond also that brought this up a few weeks ago, just on the process of learning. It can be confusing because we've got such a wide variety of traders here, some very, very experienced guys. The guys from Chicago, they're not here tonight, but usually they've been doing it longer than what I have, one of them. They've been in it for a long, long time. Is that it's okay, and you want to know more, you've got that thirst. But if you're brand new and looking at all these patterns, it can be overwhelming. That's where you've got to drill it down, write things down. Okay, this is something in the future, because this has got 400 odd pages in it. And so what we've got to do, traders, is to learn to trade the trend trades, the 34B and the 2Bs, like a monkey. Monkey see, monkey do. And beware of the shiny object syndrome. That is one of the challenges for us also, is becoming bored. We become bored by looking for that one setup, yet that one setup is the one that can bring us riches. And I actually sent this to one of our members who's been struggling a week or so ago. And we've had a number of emails going backwards and forwards. And here's what he asked me, and he knows who he is. I'm not going to say his name, of course, because it's personal what we've been going back, but he asked me whether or not, he said, this week I achieved 70.4% in SIM. 50 wins and 21 losses, including one trade. I knocked the mouse and took an unplanned trade. And then we went through a number of things there. And he's been going up and up. And he said to me, do you think I'm ready to go live? And my question back to him was this. What do you think you should do this week? Do you think you're ready? You're doing great. However, can you get it to 75%? Notice I haven't answered him. And he's come back with a great email and answered it for himself. So are you happy with your results where you are now? What do you need to be doing to improve where you are? Really, you've got to approach your trading with this degree of, how can I put it? Dedication, with focus and drilling down and jotting these things down, keeping your journal, traders, because this is what's going to make you world class. And beware of a shiny object syndrome where you get bored with the 34B or the 2B and you're looking for something else. Where trading with the trend in the direction of a higher time frame, I don't think there's anything better from my 27 years of looking at trading strategies and trading that you can do. Trading in the direction of a higher time frame. So beware if you get bored and start looking at the next best thing. Now, we also discussed last week briefly trading the 10-year and 30-year note. And we've got a number of members that are trading, and I've actually received one back, and likewise, I won't mention his name because he said he's gone off trading because it can be so boring and sideways. And that's the challenge with the 10-year note. Now, the 10-year note, you've got fantastic volume. The tick value is 1562. Your margin here, this has taken some time ago. It's about 1700 right now. Okay, so the margin is really quite reasonable for trading the 10-year note. It's higher on the T-bond. Okay, you're getting up there around 3,500 now. Now, coincidentally, I actually had some screenshots taken on the note going back, when was this? This is going back early this year, back in March, when the virus first hit. And what we saw with the 10-year note was some great volatility, some really good moves on the note. And what this particular member in the US said was that he's gone back to trading the MES and trading it profitably because the note is just it's just totally sideways at the moment. Now, all of these are on the note back early this year. But what we've seen now is a great deal of sideways action with the note. So let me just show you this. So this is looking at the 55 tick. And let's have a look at the 377 tick. So this is like from 2 a.m. Eastern, so 2 a.m. Central up to market close. Okay, so if you're very, very patient, there's potential trades there. If we go and have a look then at the 1 tick, look at this. This is from midnight last night, right? Yes, you had a couple of waves, and you still had some great volume, and we'll look at volume in a moment, but you can see it's very, very sideways. So if you're after a market that is very, very slow, takes it easy, okay, there is one. And in the folder, you'll see here a number of handouts with tick value, there's a few emails there from members, other members that trade them. So please feel free to have a look at those, but it is very, very slow. And that gets back to getting back to this thing we were talking about here is pick a market and stick with it. Become the specialist. You might have to have a couple of markets here because at times there can be situations where it's not tradable, but just be aware of that chopping and changing different markets. Okay, so moving right along, let's just talk about our fundamentals that we have every day. Hour of power, of course, checking for red flag news. In that hour of power, download, and you may remember in earlier sessions I've given you the links where you can download some of these YouTube channels, videos. Some I've already uploaded, made them into MP3 folders for you. But during that time, get it going. If you're suffering from stinking thinking, give yourself a checkup from the neck up by listening to some good stuff. We check the red flag news. We check our pivot levels. We review our charts, etc. Spend that 10 to 15 minutes a day. Remember, trading is nothing more than a pattern solving exercise. So it's very important you do that. Reviewing your plan. Is there anything else that you should be doing? So looking at tomorrow's news, that is Tuesday, we've got the goods trade. That's a red flag. That will be a big market mover. Then at 10 a.m., we've also got consumer confidence. Both of those are market movers, so be aware of that. We'll talk about Wednesday tomorrow night, and don't forget the market may slow down from Wednesday, Thursday onwards, because the first Friday of every month, we've got what they call the non-farm payroll. So where it says employment situation, the first Friday of every month, that is, as we know, a big market mover. Going there for the Forex factory just for tomorrow, nothing is really jumping out there. Volume, nearly 1.5 million contracts, so we had a fair volume. Just looking at our NQ, okay, so there on the MNQ there, once again, as we know, the volume now exceeds that on the micro, but some half decent volume, so just a fairly average day when it comes to our trading volumes. So a couple of additional hands that I uploaded into session 5 for you. Where are we here? First of all, this one. Now, we didn't talk about this, but I'm gonna probably bring this up again tomorrow, but I think this is very, very important, going by a couple of things that have come up, and I think it's really important that I get it out today, and we will cover it again briefly tomorrow. Something to ponder, and that is thinking in probabilities. And Raymond last week was kind enough to upload that really good article there on, where is it? What was it called? Thinking Like a Trader. And in that article, out of Mark Douglas's book, Trading in the Zone. So once again, this is in session 5, and he talks about probabilities. I just want to throw this at you as a concept, as something to consider. And Mark Douglas talks about this in the book, The Disciplined Trader also, where allow 20 trades of absolute risk money. And that is, let's just say here that I said to you that, as you know, I recommend you have $1,700 for trading the micro NQ. If you're trading the 4-point, I recommend if you're trading the 7, you've got $2,200. What if on top of that, you had an extra $500? That's 20 outright losses. So if you like, that's your learning curve money, your apprentice money. So what you really need is $2,200. And that is, hey, if I make a couple of stuff ups, if I have a couple of straight losses, say if I really stuff it up and I've got 5 losing trades in a row, say if I put a blinker on myself, I didn't see the charts. You've got a margin there of $500. And what Mark Douglas actually explains is there is a great, by having that margin, by having 20 risk trades, you've got that, you can throw your hands in the air and say, well, at least I allowed it, okay? It doesn't matter. If you're going for the 7 points, it's $42 a trade is our total risk. If you're trading off for T1, $840. Now, if you're trading the ES, and we've got a lot of ES traders, now there, if you're trading the 2-tick, the 0.5 Renko, that's an 8-tick stop that you've got there, okay? So you've got an 8-tick stop at that level. And what that means there, traders, is you need to be allowing $2,000. If you're trading the 1 point, which is quite large, okay, you need to be allowing $3,500, okay? to that additional margin. With CL, if you're trading a 2-tick, 1600. Now, my question to you, if you can't afford, say 500 to 800 on top of your trading account, should you be trading right at this time? Should you be trading, if you can, a lower time frame or another market? Because what I want to try to do is to get you where you're fearless, not being reckless and fearless, okay? But based upon a fact, okay? You're removing the fear from the trade because you believe in probabilities. So I want you to, think about that and to really sit back and look at it for yourself logically. Now, the next thing I've got here, which let me just pull this up, is still a little confusion over where I talk about steps. And this, the folder with these is in session 1, where you'll see there it's called micro trading. There's a folder there with a number of different cheat sheets. So what we've got to look at is what is tradable, okay? And that is quite often during the Globex session, yes, we can trade the 2-point, and our total risk is $16. Now, where I've got here, using the T1, oops, minimum, risk is $13. Where I say there, we've got a 26 tick risk, at times that might be 23 ticks. It could be 26, 27 ticks. It's on TradeStation, it depends on the size of the candles. As you know, I like to tuck my stop 1 or 2 ticks above the high. So that will vary. But what is working out and kicking butt is the 7-point. And the reason being, the higher the time frame you have, the less noise that you have or false entries. And let me just flick this over. I'm just going to quickly look at the 2. So I'm just going to have it up. If there is a potential setup, I want to be able to point it out to you. Let me just come on. So I'm just waiting for something to happen here. 19, okay. All right, well, we might come back to that. Good, great, Richard, thank you. Richard just said, and that was a really good point. I actually, great minds think alike. I actually meant to say that. So looking at the ES and just convert that for the micro, you just break that down to 10% of a value. So remember, with the micros, they're 10%. So where I said, and I've closed that page off now, whatever it was, if it was 3,800, would only be $380. Okay, so you are correct there. I just thought I'd give just a couple of examples there, Richard, for different markets. So with the micros, of course, that is 10%. Now just think about the logic, because as you know, in your account of 1,700 or 2,200 or whatever you're going to be trading, we've already allowed sort of losses there, but this way you got that extra buffer if you really stuff up. Okay, and a couple of members are really struggling even with the 1,700 to 2,200. I know some of you are trying to cheat. Traders, there is no cheating in this business. You know, once again, the trading gods are up there watching every movement. And if you break your money management rules, okay, they come and get your account. So be very, very careful when it comes to that. Now, here, what really kicks butt on the 7-point here is the 5 steps. 5 to 7 steps works really well, particularly the 5. You get them day in, they're all over the place. Now, our risk here, okay, is $42. Got to add your commission. So you might be down slightly under a 1-to-1, but spend plenty of time in looking at that. Now with the Renko, and Jen, I'm not going to forget you, we're going to be talking also, we'll probably do it tomorrow when everyone's there, spending more time on the tick charts and the patterns on the tick, because some traders are still trying to get their head around Renko. So I want you to understand the tick chart entries as well. Now with that, and so that's in one of the early folders. Now, what we do have then is, where's that other one? Is that then leads us into this. How do you achieve? So let's just say you are trading the 4-point Renko, or if you're trading the micro ES, you're trading the 1-point. And I've presented this in other handouts you've got, but let's just get back to as a quick reminder again. How do you achieve larger targets? And I really should say on the EC, on the entry chart. Well, the answer is trade the anchor chart major EMA bounces. That is, when you see you've got a 21B or above, 21, 34, and 89, a 200 bounce on either your anchor chart 1 or 2, and they are trending, consider going for a larger target because you're entering the trade on or using the lower time frame in the direction of the higher time frame. So the same rules apply as to an EMA bounce on the anchor charts as to the entry chart, except we're using the entry chart for our entry. So are the anchor charts EMAs trending? Is the relevant trade entry EMA trending? Meaning sometimes you'll have, of course, a 24 or a 34 EMA is pulling back. It's not trending because it's a deep pullback, maybe to the 89 or 200. On your anchor charts, is the potential trade a 2B? I'll come back to that, good question. Is the potential trade a 2B on the anchor charts? In other words, am I say bouncing on the 21, on the anchor chart 1, and the 34? Now, what is that? That's a 2B on the higher time frame. That's fantastic. Do I have a T1 or 3 higher closes or 3 lower closes on the entry chart? So remember, what I'm looking for there is I'm entering on the T1, and quite often, even on the anchor chart 1, and definitely not on the anchor chart 2, the candle has not closed, okay? So that's why I'm waiting for the confirmation on the lower time frame, and we'll look at some charts. So Al just asked, do you place your stop loss based upon the anchor chart? Well, no, you're really placing your stop loss, but in the way it's going to be the same swing low, Al, in many cases. So let me just give you an example just here. Let's just have a look at that. I think this is, let's have a look. So let me just pull this up for you. Let's have a look right now, current price action. Here, sorry, I'll just have some tea, one moment. So what we're looking at here, and the market open up, let me just show you this. So we had the market open, whoops, it just what we call popped just there. Let me just, that's the open of a Globex session. And what we had right there, and you can see at the open, we actually had a 34B on the open. So we wouldn't have been able to get into that trade. But right there, which is here, okay, I have a 21B on the anchor chart 1. So here I've got a 2, a 4, and sorry about the noise, it'll be gone in a moment, a 2, a 4, and a 7. Okay, so what I've got just here is a 21B, it's an 89B at this time. Now, what I'm saying is when you've got a 21B or higher on this time frame, consider going for that larger target. Now, Al's question was, where's the stop go? The stop still goes just below this little swing low, which is just below the entry or the signal candle. Okay, so that candle there, or brick as we know it really is, just there, your stop is 1 or 2 ticks below there, which is here. So we've entered that as a 21B on your anchor chart. So you may then think, well, what would be a good target? Well, there you could be saying, okay, I'm gonna go for 5 steps, 1, 2, 3, 4, 5, which is gonna put me in really up here, which is about 10 on this particular time frame. So with the concept I'm just showing you here right now, going for larger targets, do I have a 21B? Well, right there, we've got a 21B. Are the anchor charts EMAs trending? Well, we could see right across all of them they were. Is the relevant EMA? Yes, it is, and that's perhaps repeating myself in a different way, but just making sure it's trending. Do I have a 2B? Well, I don't have a bounce on, and let me show you this again. We don't have a bounce on the 21 or 34 on the anchor chart to here. It's only an 8, but it is a 2B on this particular time frame. That is, we're bouncing here and I'm bouncing here. So where you've got these, consider going for a larger target. Now let's have a look at the 4-point. Have I got that here? Yes, here it is here. Let's have a look at the 4-point, because the challenge is with the 2-point, even though quite often you'll find it's tradable, just remember you'll get a lot more noise in the market, okay? A lot more false entries. So if you're gonna trade it, you've just got to be more cautious. It's easier to be chopped up. That's what I think I'm trying to say. So if we have a look at this here, so this is the Globex Open just here. And we can see just there, we had, let me see what time that was. Yep, so at 17:19, you've got a 34B. Now, you've heard me say that I really like to see the super scalper plot to confirm my entry. And I'm not saying that I'm totally right about that. And this entry here is also a rule of 1. So let's just explore what sort of entry I've got here. I've got a 2-candle pullback. First candle closes in the direction of the trend. It's a rule of 1, and this is a 34B. Why is this a 34B? Because I've kissed the 34. Or if I had a 34 EMA channel, I'm well and truly in that channel at that stage. Note down here, traders, at this point, I don't have a hook. Okay, so it's a rule of 1 and it's a 34B. So my stop would go below. Now, this is where you can then be using your 2-point T1 as confirmation of this entry. You may not be physically trading on this chart because it can pop really quickly, but you're saying to yourself, okay, if I get a super scalper plot here, I'm going to enter on the 4 and manage it assuming my 4. Now, with that being said, I've uploaded something that I was just putting together a couple of things for Jen, the member that I mentioned, just asked about trading with the Renko. And I just thought you'd be interested in this. And Ricardo, one of our long-term members, this is something he did back in 2016. And he just put down, and I've uploaded this into today's session 5 folder, and I've also uploaded this into session 7. Here's what Ricardo's rules were, and I think it's in the 34B folder anyway, but just in case. And by the, yes, and you do have, very quickly, sorry, let me just quickly show you this because it's setting up in real time. All right, so what have we got setting up right here now? Okay, so see right there, we've got divergence. I've got no divergence here. So I've got a T19, but if you look over on your anchor chart 2, which is only a 7, okay? Look at your divergence there. Now, technically speaking then, you've got a 2D there, a 2DA. This is an A, remember my highest time frames. Now, because I've got divergence here and there, where's our target? The 89 as a minimum is my target. Where is my entry? The close of the 3rd candle. So you're really in on the 4th. My stop goes 1 tick above. Now, I believe we're probably going to continue to fall, and I'm just going by not what I think, by what I'm seeing. Why? See how my MACD here is falling right away? I'm starting to fall here, so I wouldn't be surprised, and it may once again step down, but I wouldn't be surprised if we end up with a much deeper pullback. And that's what I'm reading, not what I'm thinking. I'm thinking on what I'm reading on this, okay? Once again, my opinion means nothing in trading. It's, you know, what am I seeing here? That's what I'm seeing. So at the moment, this is a 2D, and some of our traders are trading that as their entry chart. So remember, all of our trades are fractal in nature. Now, just while we're on there, how would we go here with a profit? And once again, see how we've come down to the 89. So on every time frame, you find these EMAs will be support resistance. So remember, as a support level, a price level on a chart, if it's a support level, is below the current price. Now, generally, we're looking for buying opportunities at support. We don't want to sell into support unless we've got enough room to profit. Okay, you can sell into it if there's enough room, but you want to be very careful there. Now, for resistance, if it's resistance, a price level is above the current price. We're looking for buying opportunities when we've got enough distance to buy into it, but be very careful if you're really close. And quite often, as we know, support, once we break through, often becomes resistance once we get below that. So what I was about to say was this: with the 2-point Renko, 7 steps is $14. So 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, so 10 steps, of course, is going to be $20. So it's $2 per step down, if you like. So you go and get a larger move when, say, you're trading a very high time frame, divergence trade. Okay, you know, once again, to get you $60, $80 on a micro, you're kicking butt. So, but once again, let me just put the disclaimer here. Please be extremely cautious until you're consistently profitable as a trend trader. I just want to say that, okay? Now I'm losing my place. Where was I? What were we talking about then? Okay, achieving larger targets. Sorry, that's what we're talking about. So perhaps you can see that. And likewise on the entry chart, when you've got a golden divergence trade on the highest time frame, you'll generally get a larger move. Now, so you're entering and using the T1 or 3 higher closes or lower on the lowest time frame. Now, this is what I thought of yesterday, I just wanted to bring up, was following the 8 EMA. That is, how can I break it down a really simple way if you want to trail? So let's go back to this chart here. If you want to trail, one of the simplest ways can be just looking at, now, here's how we've broken this now. Okay, so if we break this, I wouldn't be surprised if we come down and get a 200 bounce. We'll see what happens here. If we get a 200 bounce, this is now taken out, well, it's taken out this low. See that there? So I wouldn't be surprised we get a potential ABC. Now, we may not, but once again, we're forward thinking what may happen. The trend may continue, but if it does come down, we get a bounce, and if it fails, we could roll over. Once again, got some pretty major divergence here. But back onto V8. So a simple way of trailing, if you don't have the ATR or don't want to have the ATR on, or a parabolic or other things there, just look at your 8 EMA. Or as soon as you get 2 closes below the 8, and see that there, we've now got our second close below the 8. If we only got 1, we're right on it, doesn't qualify, but that would if that was only 1. So here, if the market's slow enough, and that's the problem sometimes, if you're trading in the lowest time frame, it's hard, but you'll also get, if it's slow enough, you'll pick up those big runners. Okay, you'll pick those up. So see this here, see how the 8 EMA, we still don't have a close over it. So as soon as I get 2 higher closes, you'll notice that the 8 EMA will turn. Now just get ready for a potential bounce on the 200. We can see it coming down just there, which will be the 21 EMA over here. So we nearly always get a bounce on the entry chart at the 200. That move on the lowest time frame is then a counter trend trade. Why? Because we've taken out this low here. Okay, so this is now becoming a potential CT, but remember, it can continue again, it can take off. We've still got a big uptrend. I'm just looking at what's happening with at the moment, the MACDs. So expect a super scalper at this stage. Okay, we'll see what happens. Okay, yes, that little hook there is a T10 just there. See how the long-term stochastic has come down. We've now got this hook back over. Okay, that is a T10. I do prefer my T10s to be higher. Remember, your best T10s are off major divergence, just like your T20s. Okay, so your best T20s are off divergence. And we will come back to that, and that just brings me back, and on that point, where is it here? This is a question here from one of our members. Shailesh asked about this. So Shailesh is not in the room today, but here, for T20-1, is it a trade if the ATR on the AT1 is up? When you've got a T20 or a T20-1, is it safe to take? Okay, because we can see here that the 89 is still heading down, the 80 and the 200 is still heading down, even though the ATR is flipped. So where do we consider it's safe to consider taking a T20 or the first pullback being a T20-1? After you've had at least 3 waves or an extended move, yes, it can continue. Okay, that is, you can get 8 waves, 10 waves. However, the probabilities increase the more waves you have. It's getting back to the Gann statement about the end of a long run, your first pullback. See how you've got a higher high just there, or this is obviously a lower high coming down. Here you've got another lower high. See how traders, this is a new higher high, a lower high. We've now taken that one out. This is where the Dow theory is, that this can be one of the safest trades to take because you've taken that out. You're making new lower highs. Now we've made a new higher high. Now, where these can be okay is if it's after an extended move, and also when you've got room to move or to profit to your moving averages. Now, it's not as safe as a trend trade because, as we can see, it did turn. However, if you've had an extended move, the market may be looking at changing direction, and it's made a new higher high. So I just thought that was sort of relevant just with that. Okay, so we can see here we're just stalled at that point. And just while we're doing that, let's just have a look at this little handout here. So consider trailing your stop. Follow the 8 EMA, one of the simplest exit trailing strategies. Is the 8 EMA trending? Okay, that's what we're looking for. Exit on the close, exit on or a close over the 8 EMA. On the Renko, just a very simple rule is as soon as you get 2 higher closes or 2 lower closes against the trade, you're gonna find that the 8 EMA actually turns at that stage. So yes, I did upload that. Okay. On trading the process, we spoke about that little calculator. Now, trading in the zone was also in session 5. And when we come to divergence trading, there's a great handout, and the seasoned traders have seen this. This is from Sam, who was the international airline captain. He put this together just on divergence trading. It's a lot of really good tips there in that little document. We also, empowering questions, and this really gets back to this one here is to be really analyzing what you're doing. Traders, you are your own funds manager. You need to be doing this, sitting back, and this is why it really pays you initially to focus on one market. And don't try to trade, even though you can, the 2 micros, say the MES and the M and Q at the same time. Really focus here. So what's not perfect yet? And once again, what's the presupposition of that? What's not perfect? It can be perfect. We're still gonna have perfect losing trades. That's right, you're gonna have perfect losing trades where you entered it perfectly based upon all of your rules, but someone on the other side of the world with a fat finger decided to press the wrong button. Make sure you're going through this. Okay, what did you learn? How can you improve? What did I learn from this? What will I do differently next time? And we do this with our winning trades as well. It's very, very important. Okay, getting back to this great article, print this out, traders. You know, make this part of your trading psychology folder that you should be looking at regularly. There's some really key points in that particular document. Once again, thanks, Raymond, for that. All right, let's get back to our PowerPoints now. All right, so we can see here, and I'm just watching you. So as I said, we've got some support here. I'm expecting a bit of a bounce. The market is slow. And this is where also for our 7-point traders, this is where you would be right now. Let me just show you this. So this is the open. So yesterday, if you were trading a 7-point, you would have seen it was very, very slow. You had 2 trades in like 4 or 5 hours, 6 hours, something like that. So that's the X open. However, there's some great winning trades on it. Okay, let me just put that back out. Okay, here's our bounce, by the way, on the 200. So what can happen here? Well, I expect the super scalper to plot, as I mentioned, and with many of these, usually, not usually, but quite often now, it'll rally up and it'll form into a ABC or bounce off for 34. This is a little T19. The T19 is the divergence trade on your lowest time frame. Okay, so notice here we've got some divergence just there. And where we talk about, and just on this one, we talk about pivot magnet trades. Remember with pivot magnet trades, you're selling into a pivot with the trend. Likewise, you can sell into an EMA as long as you've got enough room. Now, personally, I'm looking at this and expecting, okay, a bounce up here. I've made a new lower low. I expect to turn up here. Now, of course, it may continue. Now, if I'm looking over here, I don't have a green candle. Remember we've spoken about in the past, if you've got a very deep pullback and you want added confirmation of a potential trade on your entry chart, wait for the candle to close on your anchor chart 1. So we can see here, traders, I've had a deep pullback. What's gonna happen here? If you want to wait longer, you wait for this candle to close to help confirm this bounce. And this is, you know, it's a bit dicky because we've still got this strong uptrend. I'm just reading what I've got here, strong divergence. So we will come back to it and see what actually happens. Let's go to the ABC. I think this is really relevant on the ABCs with this. Okay, so with the ABC, there's so many different ways of actually trading the ABC and interpretations on the ABC. Now we see this pattern day in, day out setting up. Now, many ABC traders will swear by the retracements to qualify the ABC. And most of them will work on a minimum pullback of 38% up to a maximum of 61%. Look, I'll look at it, but I don't bother measuring and whatever. And I think you can also, you're splitting hairs, particularly with Renko especially, because the way they form, but they say you should never consider a trade to be an ABC if it's any worse or any larger pullback than 78%. 61%, 62% being the premium. Okay, so here we've come down, 1, 2, A, B, C. In this particular case, note how close you are up here, and some call it a 1, 2, 3. So there's lots of interpretation on these. All right, so let's have a look at some charts here. Now, this is where you'll have ABCs set up on both your entry chart and your anchor charts. Sometimes your ABC will be more obvious on your entry, other times on your anchor chart. So if we look at this here, price has come down. And once again, as many of the trades, have you had an extended move or coming off a major divergence? Look at this angulation you've got right there. See that there? If you've had a major move down, 3, 4, 5, 6 waves on the way down or more, or major angulation, an ABC, T10, and many other trades are more likely to work out. That there you could classify as an ABC. That there is good 38% retracement, and away we go. When you do enter these, just be aware, what have I got above me? In entering that, I can see I've got a 200 there and I've got the 200 here. So remember, when you buy at these levels, just be aware, and remember, with our entries, what do we look at? So with an entry, do I have a setup? Well, it looks like it. Does it meet my trading rules? Where's my entry? My entry, if I'm using the super scalp, is going to be on the close of the third candle. Where do I place my stop? Ideally, it depends on your stop strategy, but mine is 1 tick below the low, just here. Where is my exit? And when you're considering where's your exit, you may have a fixed exit, but even then you still need to consider, are there any areas of support or resistance in front of my trade? So I want to know, where are the pivots? Where are the major EMAs, which you can really see there? You had a 200 above. So if the market is slow enough, you can get out of that and still pick up some ticks. If it's really fast, you can still take them, but just be aware. Now, this was the Globex session. So you're always thinking. Now, as you enter that trade, you're thinking, okay, I've got a 200, we usually get a bounce. Here we went straight through it. You got your 5 to 7 steps, and you can see it turned into a T12. We're bouncing off the higher time frame at that stage. Now, a little later on, you now had a very obvious ABC setup. Notice this. This is noise. Notice on your anchor chart 1, it is much more obvious. It's an ABC, A, B, C. Where here you had these little intermediate moves on the way. So this is where it just pays you to keep an eye on what's happening. For brand new traders, this is a sort of more advanced pattern skill. So maybe you may choose to just sit this out for now. Don't take them, but just start to recognize them. Write them down in the playbook, something to learn. Another one, much more obvious again. Okay, you've got your 60-odd% retracement here, A, B, C. You could even say on your entry chart, that's a little ABC just there. Once again, look what we bounced off, the 200. If you note here, the 200's in a very definite downtrend, the 34.89, so we've got a definite downtrend, so be prepared for that. Now on my anchor chart 1, I've got a more obvious ABC setup, as we can see just there. Now, what about here? Well, here you've sort of got a little, and by the way, you've got an entry there. Let me show you had an entry, you've got an entry. Let's just have a look at this here, right there. So you're in your field on your long, you are long. Here would be after a minimum of 5 steps, cautionary 5 steps. Okay, now 5 steps on the 2 is only $10. Just gonna cover your commission. 1, 2, 3, 4, nearly hit 5. Now, on your entry there, your one green candle. Okay, so now you're going to get it. Now just be aware, we'll see if this then rolls over and forms an ABC type setup. We'll see. Once again, it could be a straight trend continuation, because here on this time frame, that is a 34B just here, and you've got a 21B here. Okay, so why on earth was I saying to be cautious? Look at this divergence here. That's why. Got a big drop off here. Now 1, 2, 3, 4, 5, 6. So even if you got in, if you waited for that first candle to close, we had a high there of 98.75, a high there of 98.75. It would have put you in 1, 2, 3, 4, 5 on the close of the fourth candle. But what gave you that confirmation was that close there. Okay, so if you wanted to get out and scalp the crap out of it, as we say, you're up your 10 there, less your commission of $1, you're up $9 on that trade. Now that is where you see how it popped. You can then look at putting in a buy stop, an order in advance of the market, so you get automatically stopped into the trade. We will come back to this. I'm expecting, a rollover. Now, if you're after your 7 steps, I would perhaps consider going to break even, because we could roll here, may continue, right? Now the question is here, and I'll tell you what, do I have a fan in of the EMAs? I do have definitely on the 2 higher time frames, but the smaller time frame, not yet. Okay, it started to turn. Hopefully it doesn't confuse you too much. So let's go back to our ABC. Okay, this here, and this is something I want you to note. When you've got, like you see how now, and even there you sort of just took that low out, but this one here is now, I'm now setting new lower lows. So I've had a good move up. I've now set a new lower low. This increases the probability of this ABC working out, and that's it just here. So there's your A up here, there's your B, and that point is your C just there. Let's look at another one. Here we've got a smaller ABC. Note an extended move, great angulation just here. Okay, so you've got great angulation. Look how prices angled away from the major EMAs. We've rallied up. Okay, we've hit the 34, come down. That's what, about a 50% retracement, whatever it is. That trade there is also a T10. Note here, traders, how the long-term stochastic was oversold. It's now heading up. Note how the long-term stochastic on our anchor chart 1 is now heading up. See how the short-term is now hooked. There's our entry, and there is our ABC. As you can see, much more obvious on the lower time frame. Here we've got a big picture ABC again. A, B, C. Now, if you look at this here, okay, much more obvious there, A, B, C, where that little thing there is just there, a little glitch in its system, much more obvious. And this is an ABC in the direction of the underlying trend. Another one here, ABC. So here's my A, B, C. Note how this, well here, look, this is a dicky one here, because it's gone straight up. But here I'm forming, I'd classify now, I'm starting to form a new lower low. That is definitely a new lower high. On my anchor, it's much more obvious. You can see that ABC. Now, when you've got these, remember when we take this entry, we're always thinking, where may we bounce? Well, we know with pretty good degree of certainty, we're gonna get a bounce at the 89. then the 200, we break that, we get the 200, and you can see that that's the 34. Another one, ABC. ABC, much more obvious here on this chart. Another one right here, angulation. It's also a 3D, which supports a decision. Also, note this here, how we've now, this point, the B, is taken out this high, which is an added benefit, okay? When you get that, when you start to form new higher highs. Now, as you break that, see over here, that point there is there. Where's our next area with this bounce? We'd be looking at bouncing off for 200, off the 80, off the floor pivot up above. We may go straight through them, but usually, as you know, we get a bit of a bounce. Let's just do one more. This is on the TY. Here we've got, where is it? Where's my ABC? ABC setup. Oh, here we go, sorry. Here's the little one, A, B, C, and there's a bounce. Anyway, you can spend time on those, going through a whole stack of them there, just make sure. And just here, Suri Dedella's, he's got an auto plot. It plots automatically, as you can buy various software programs. Look, and I've got a heap of them, by the way, different types of things that'll plot, and they can vary from a programmer to programmer. But one of his favorite patterns there is the ABC, as we were just looking at here. Right, lower low, we come back up there, there's our ABC bearish, and away we go. And there, he's actually using a measured move. So from point A to point B, he's then using that as an extension from C to give him D. Okay, so he uses a measured move from there to there. Now, there's a lot of traders that use their measured moves, as we know. Right, and there's some other examples that you can study. There's his measured move, A to B, and you extend that A to B from point C. Now you can do from the extension from point B, by the way, and no surprises which is the most accurate when you take it off C. Why? Because you hit it quicker. All right, that's your ABC. Here we're just still fluffing around here. As I said, I wouldn't be surprised if we had an ABC setting up. So you've got your 5 points. I'd definitely be at my break even, that is for sure. We'll see what happens. Anything can happen. Okay, let's do, okay, just we'll do one more after this one. Read the hidden, I am working on it. Remember I promised you I was gonna do a hidden divergence PowerPoint. I will only present it when I feel I've mastered it myself. And it gets back to that thing, if it ain't broke, why fix it? I'm looking for the next, I've got that many setups, okay? I still am not confident in a blink of an eye that I can see it. So I'm just putting together the different interpretations and things. So I'm working on it, but let me give you something to think about. For those that don't know, Laurie, you're, I think, we're pretty good at hidden divergence, etc. When you have, and I had an aha experience when I was putting this together yesterday, and this is why I'm even more determined to put it together. When you've got a really deep pullback on your entry chart, okay, but you've got hidden divergence with the trend on your anchor charts, that further supports the decision of trading or taking a trade that may look like a really deep pullback on your entry, but of taking that trend trade. Does that make sense? I will have certain resilience, laughing out loud, said Mark. So if you can look over your anchor charts and you can see that you've got bullish or say bearish, but you have a really deep pullback, almost like for a potential change in direction on your entry chart, but you've got hidden divergence on your anchors, which basically means the trend will probably continue down, okay? That is a really good heads up to be, at least at worst, really cautious on your trade on the entry. Just like when I don't have divergence on my anchor charts. And say if I'm long and I've got no divergence at all on the anchor charts, almost certainly the trend will continue. So it supports a decision to keep trading with the trend. So that was the aha that I had yesterday with that. So more on that. So yes, I am a bit resistant on it, but we'll get there. Now, just on the great trade setups, I've uploaded this, and we'll do this tomorrow. We'll go to the live charts in a moment and go through some things, but I want to go back through because I've uploaded this, and this is, if you like, a playbook of really good setups that I want you to really learn, okay? Is it no divergence? Oh, here's one right here, okay? No divergence on the anchor chart. At that point there was no divergence on the anchor chart. Trade the 34B, lo and behold, so there we've got right there. So where you've got that, you know, take screenshots of, oh, you lost? I'll get you there, Mark. All right, let's go to the charts traders and have a look at this here. So not a lot is happening. So what we will do now, I want to look at for you, the 1-point MES. Now, just as a reminder, let's just go back to the open of the global session last night. And I just want to remind you, one of the benefits of trading the micro NQ over the micro ES, and that is the average daily trading range is much greater. Okay, so you technically get more bang for the buck. Oh, thanks, Laura. Laura just said tops down, bottoms up, compared to tops and bottoms to bottoms. I'm going to put that in writing for everyone. I need to think about that one, but I'll put it in writing. Thanks, Laura, I appreciate it. Thank you. So with this, what I am going to do, and let me turn off the ATRs on this. I'm going to go you through step by step to make sure that everyone's got this down pat, what we're looking at. One of the advantages here is with the ES, you do have, can I say, more stability, or it can be smoother than the micros. But I do love the micros because you can use a wider stop, and that takes care of that volatility issue. So okay, nothing's happening there. I'm just keeping an eye on what's happening on that micro NQ. So let's start here. So yesterday we had the open of the market. All right, within seconds, and this was within seconds, nothing happened, as you can see there. All right, so here we traveled up, and these brown dots, all they represent a rule of ones. Okay, so that's what they are, and I just thought I'd put it on as a reminder. Now, with the ES and the micro ES, I am happier to take a hook trade or a short-term stochastic hook before I have the super scalper. Yet with the micro NQ, I just prefer the super scalper to plot. Okay, I may be splitting hairs, and I actually could be a disadvantage, but it's just because the NQ can be whippier. All right, but we will focus here on the super scalpers here. So our first potential trade was right here. So market open. So what have we got right there? This is a 34B. The 34 had started to level out. It's this is 1 hour and 6 minutes after the market opened. Let's remember that on the 1-point micro, each step is worth, what is it, $2.50. Okay, so 5 steps is $12.50, 7 steps is $17.50, and my risk is $17.50. So therefore, if I enter this trade using a buy stop 1 tick above the high of the 3rd brick, and I place my stop 1 tick below, just there, okay, I've got a $17.50 or thereabouts stop. So the ideal target is 7 steps. That's the ideal one. Remember, the further you move out from your major EMAs, being your 89 and the 34, you've got to watch this. You'll get more retracements, more pullbacks. Okay, so there is a trade. Now just there you did have the super scalper. That trade there was also a slingshot. See how we're overbought? We then get the hook. Now with a slingshot trade or a rule of one, your risk on the 1 point is only $12.50. Now reminding you that the chart for that, is it, have I got it there? No, I don't have it in that one. I've already closed it. In session one, the table of those, what each step is worth, is in session one. Okay, so we got a 34B. You had a stop out there if you took that 2D. Why is that a 2D? There is divergence and there is divergence just there. Your second 2D, higher high on price, lower high on the MACD finally worked out. So now we've got a 2BD just there. Now with a 2BD, we end up getting stopped on that trade. You can see there it come down and took us out. Now we've got a 34B on our anchor chart, 1. Now note here on the anchor chart 2, it's still just a, we're only touching the 8 EMA. Remember what we said or spoke about earlier was going for larger targets when you've got a 34, a 21 or a 34B or even an 89 on your anchor chart. Now this trade here, that is not a 21B on the higher time frame, even though you did get a half decent move. This one is quite clearly a 34B. Now remember, this market's quite slow. So the steps are, we see a pullback. We can see that we have a definite uptrend. On our first green candle, we don't have the super scalper. So that's what we call the get ready. The second candle is your get set. The third candle, as soon as we tick up, we've got the white paint bar, or on the close with some platforms, the super scalper plots, that is our go. Now we now have our entry and we now have some movement. Let's just have a look at this here. A follow through on that 34B just here. It didn't turn. So what am I now looking for? Remember earlier we were talking about going for a larger target by following the 8 EMA. We had one candle close here. We can see here we didn't get the 2. Now I personally would have been out there. You can always re-enter is my philosophy. However, I would have been better off, as we can see here, staying with it. That's just, I was reading my indicator. Now, what are we looking at now? Well, over here, I'm still very low and I still believe I'll get a turn. However, we'll get a trade with the trend at the moment. So we've got a new higher high. So with that new higher high, we're looking for a pullback and a trend continuation trade after that. Here it is a 1D. You do have a 1DA on this chart. No divergence here. No, well, no divergence there. Okay, we do have divergence over here. So I'd be waiting, if I'm going to take this for a scalp, so over here, we'd be waiting here for the super scalper to plot. Now, even if we get a bounce, or even if we come back down here and bounce off for 21, that'll give me my good 5 to 7 steps here if I take this super scalper just here. If you're trading with the trend, you don't have anything. You're waiting for a pullback and a trend continuation. All right, it's hotting up for a potential reversal in my humble opinion here. Now, see how we're looking at the 2, the 4, and the 7? What's the 7, 12, and 21 telling me? if I look at this here, I've got no real divergence here. And on the highest time frame, no divergence whatsoever. And this is where you can suffer from analysis paralysis traders by, if you jump around from too many time frames, it can really paralyze you. Geez, well, what do I do? Now, let's go back to the ES, micro ES, excuse me. Let me just have some tea. Okay, so we've now got a bounce. Over here on my anchor chart, it's now we can see it right there, we've got a 34B. So with that 34B, I'd be looking at my previous high. Okay, it's a 34B. I'd be expecting to come up, it's a T19 here, to then come up and potentially take that high out. As we know, quite often we'll stair step. Okay, so we've now come up there. There's our 34B. Now we've sort of formed a double top just there. And actually, it come back down. Oh, we've got another 34B, so I'm just looking at this here. That's what you'd be seeing. We're still right, so that was a 34B to go long. Look at the trend. Okay, look at the trend just there. Okay, that is a 34B. Just looking here, I've got okay, so now we come up, we've got slight divergence there. I've got divergence here, and this is what I'd be looking at over here. So it's sort of, look, it's more of a 2D. I've got there a 3D, but see that there? Now being a 2D or a 2 or 3D, where do I expect to pull back? Back to the 89 EMA. And bang, now we've come back to the 89. So just here, traders, what do I have just there? That is a 2BD. That is a 2B. Let me just show you this. There is our tail. That is a 2B right there. It is also a 34B on the anchor chart 1. We want to be extra cautious when it comes off for 3D. We're going to be prepared for what? An ABC, a T10, and there it is right there. Why is that an ABC? Well, now it's, look, now you sort of haven't taken out any real lows, but if we look at this here, just there, okay, you've got a lower high, that's really your second lower high, so you could classify that as an ABC. Now we come back, and now I've got a bounce again, just there. Whoops, that's still over there. Sorry, that is a small ABC. This is where it's a bit hard doing it this way, but right there, I've got a bounce. It's also a 34B on my anchor chart. And there is 1, 2, 3, 4, 5, 6. So you've touched 6 steps realistically. Now we look at this price action, what's happening just here. And we can see that traders, it's quite messy there. So we're sort of making new lower highs at this stage. That's a little bit high. So we're sort of have gone into the chop situation. Now here, this is the ABC. I think this is it that I'm saying. We've got an ABC sort of setting up here at this stage. And if you didn't take that trade, no problems, okay? Because here you are going sideways. But what I want you to notice here is a lot of these trades are worth what? 5 steps. Okay, when you got 5 steps, that's $12.50. On these, your risk, by the way, was $17.50. Now, what have I got here? So we've pulled back. This technically is a CT trade on the lowest time frame. And just here, this is what you'd be looking at. Okay, so right there, you've sort of starting to go sideways here. You've got a bounce. You've got no divergence. This is a counter trend move. Why is it a counter trend move? Well, see how we're now making new lower lows. When we start to make these new lower lows, I'm expecting what? The market to turn. And is that going to turn just here? Okay, here once again. Okay, you got your 5 steps, but it's sort of, look, we're in sideways action at this stage. And by the way, this is Sunday night, US time. It's now turned into, this is midnight Central Standard Time. So now we've got a bounce. Let me just check. I'm sorry, I'm just checking to make sure I got all the key things covered. Look, we'll carry on with some of those. Sorry, I'm talking to myself now. Okay, now I've got a potential break even, and that is this 34B just there. Look at the trend. We're heading still up. See that 34B there is our bounce. Now, remember earlier we spoke about this. By the time you had 3 higher closes, just the questions come through, would I have taken that short on the anchor chart, on the entry chart, on the 2? Yes, I would. Let me just show you what I mean. So yes, I would have taken that short as a scalp. My target is the 89. Once again, traders, this is a lower probability trade. I do have some strong divergence. That's why I personally would take it. Could turn into a 34B. I've got no divergence here. I'm really trading off the strong divergence I've got on the anchor chart. So until you're consistently profitable, stick with these, just trading with the trend, okay? Back onto this, and we'll go back to that and just see how that fans out. So why is this a break even? We rally up. Notice here oh, sorry, did I finish saying what I was saying? If you're not sure, wait for this candle to close, which means you wouldn't have been in till somewhere up here. Okay, 5 steps. So 1, 2, 3, 4. If we got in late, 1, 2, 3, 4, 5. So you sort of, I'm calling that, is that a break even trade? Okay, and it really looks like now we're starting to roll over. Just look at this here, a lot of resistance. Would have I taken that trade? Probably not, and I wasn't trading this time, probably not. All right, look at this sideways action, okay? Here is a good sign. See your T20s here, flicking back there, the black dots. See how they're just backwards and forwards? So what we've got right here, traders, is a lot of chop right there. You've got a lot of chop right there. So what am I now looking for? This is a 200 EMA overshoot, traders. That's what we've got right now. It's a 200 EMA overshoot. As we're coming down, I'm looking for divergence. Okay, so that's what I'm looking for as I'm coming down. Now I'm just going to track here. This is what I'm looking at here. Oh, okay, Shailesh, that's my T20. Right, so that's the T20, mate. Just there, yep, no worries. Okay, so when you've got that, and this is why you've got to be very careful if you're trading the T20s as a standalone strategy, you really want to be sure, okay? Because as you can see, you can be really chopped up. So your best T20s are after an extended move. Now, as we're coming down here, note how we're getting close there to the 89. What am I thinking? A bounce. And no, we go straight through it. I'm going straight through to the 200. What am I thinking? A bounce. No, we're going, oh, well, there it is there. Finally, I've got a bounce. So right there, here I've got, so right there, let's just do this. We'll go right along there. Damn, sorry, that's not what I want to do. So now I do have divergence. I'm just trying to get to this point here. Is that it there? So that's it right there. Here, I've got a T19 on this, but here is why you would strongly consider taking this trade. This is a T19. Here is my divergence, there to there. So it's a plain vanilla T19. Normally when you've got a T19, and our entry is going to be, of course, on the close of a third candle, how much distance have I got to the 34 EMA? Well, what we can see there, we don't have too far. So we would normally discount that trade. However, it's a T12 as well. That is, we're bouncing off the anchor chart 200 EMA. Now, your best T12s or your best bounces are these. And I may as well bring this up because we were going to cover it. So let's do this. So when you've got a T12, all it is, traders, a T12 is nothing more than bouncing off a high time frame. So right here, we've got a 200 EMA overshoot. And when you look over at your anchor chart, okay, you've got right there, and to take the trade, you must have a super scalper plot. There we're bouncing off the 200. One of the advantages of this particular T12 is that we're bouncing off the 200 with trend. In other words, that one's following the trend. So you'll find those bounces will be a higher probability. Likewise, here, market rallies up. This is on oil. We hit the 80-cent level just there. And what is that? Right there, and even over here. So see, on these, you've got, these are not divergence trades, but note that you're bouncing off the 200. This one here, you may have been stopped on that particular one. Okay, see, I didn't travel too far. Here's one here. Look at the long-term trend just there. Okay, the long-term trend, we're heading down. Okay, we've got a bounce here, which is that one there. You would have been, if you had have taken this one just there as a T12, just there, you would have been stopped, and you got a winner and a winner. Why would have I been stopped on that one? See that candle just there? But note here, you're trading with the trend. And this is where believing in the law of probabilities, traders, right? Got a loss, beauty, we're one close to a winner. Okay, so here, I think you're getting a general idea. Just there, that's it, just there. Right, so we get a bounce. Note here, you've got no divergence. So there's no real reason for taking that trade on that time frame at this stage, but you certainly do on this time frame. This one here, we rallied up. There's where you hit it. And what I've got there is, and just pointed out, and I just expanded this here, waiting for a reversal candle with deep pullbacks. This is where you may choose to wait for the first candle to close. Now, it got you in 2 ticks later. So if ever you want that added confirmation, you can wait there for that first candle to close. Another one here, this is a live trade I took. You can see there I bounced. That trade there, you could almost classify there as a little T19. See that there? It's also a T19 here. But look at the direction of the trend. So notice a lot of these T12s have all been trend following. We've gone and bounced, slight divergence. Even on this time frame, you could even argue that's even like an ABC just there. Do another one here. Open, you had a, now that there, that's on the 4. You wouldn't have actually, now this is trading on the first candle before a super scalper. Okay, so there you wouldn't have taken that there, but here you would have been in there, which is that there, you're bouncing off the EMAs. Here, entry just there and there. Anyway, I think you get the general drift now. Okay, so that there we were bouncing. Price then rallies up to there. We then have, it's almost like a 2BD. Notice here is my T20. You will notice, of course, that many of these trades will fail here. Notice how this has now formed a new higher high. You could even say it's taken, you have got a couple of higher highs there. Now, it's a lower probability. Sometimes they work out. Notice here I've got no divergence at this stage. Let me just go up to there. We're right there. No divergence, no divergence. Okay, high risk trade. Note here also that the 21 is crossed above the 34, the 8 is above. And don't forget, look at here, if you were trailing using your 8, you would have been there. Sorry, my garbage truck, second one going past. There is down here, there's my second exit. If you had have taken that one as a 2B, that is, see over here how you were bouncing off the 34, just here. So if you had have taken that, I wouldn't beat yourself up over it, okay? Because you look at that there, the 34 is trending down. Then we get a secondary entry. Okay, so we can see just here. So you actually had that, you're still on the same candle there. Now it actually is a bet the farm. See how I've got divergence at this stage just there. So I've got a double top, I've got divergence. Where is my target? My target ideally is to take out this low. That's my target. Take that low out. Do we take it out? Now note here, we come down and we get a bit of a bounce at that low, if we can see that. Okay, so let's just move this along. We've got a pivot just below there as well. If you're using your 8, you would be out. Now we now come down and look at that there. So before I scroll any further across, look what we've got at that point. We've now got, and just there, 3 high closes, it's just there. We've now got a 1D. Well, maybe we could even call it a 2D. We're starting to cook up to get there. See, I got a high low, but definitely right here. Now on let me just do this. On here, that is on my anchor chart 2, look at that there. It's also bouncing off the anchor chart, sorry, off the 89 and off the 200, just there. And jumping ahead, may as well do that, otherwise we're gonna run out of time. So that's that point just there. See here on the high time frame, what is the trend bias? On the highest time frame, the 89 is above the 200, 34 is above 21. We've got a very deep pullback here. So if we look at this here, our trend direction is we're still in an uptrend. So there's your entries on the close of a third, 1, 2, 3, 4. Look, I'm not sure whether that touch 5 or not, you still may be in it, okay? And why is it a T12? I'm bouncing off the major EMAs. Now it forms a little ABC. What else is that? That's also a T10. Long-term stochastic has been oversold. It hooks up. We're in on the third. Where are we expecting the bounce? We're expecting to bounce off either the 89 or the 200. So we come up here, and this is what you'd be looking at. We rally up, we hit the 200, we get the super scalper. Let's just go back to see what are we looking at here. We can see, traders, that we're in a definite downtrend. Look here, and at that stage, you'd only see that red candle there. On this, I get a big red candle form, which gives me I've got my 3 lower closes there. Now I am conflicted here, however, I've got a bounce, and I've got now the 34 is under the 89. Okay, so I have to short this. It is a high risk trade. Why? Because of this zone. Okay, because of that zone. And down we come, it forms now. If there, you hadn't have entered there, you weren't stopped on it, now it turns into, like over here, a bet the farm. Remember Ben, our FedEx pilot? he will only take a pullback to the 200 if it turns into a bet the farm, which is where we have a double top against either the 89 or the 200, and there is our divergence. Now let's have a look at this. We'll come back to this, but let's just have a look what's happening here. So on our 2, I would have been stopped on this trade just there. So if you were trading the higher time frames, which I've sort of recommended to you, where are we? Let's go to the 4, the 7. So what have you got on the higher time frames? You've only got really one, well, this is on the NQ. Here's the only trade. Well, that's not true. I've got another one I'll show you in a moment. You've got on the 4, you've got that one there, which is a 34B. And on your 7, you've got this long trade just here. You could have entered. Now, this one on your 4 is a 2B. Why is that a 2B? Here we're bouncing off the 34, and on your anchor chart 1, you're actually bouncing off the 21. So if you look at then, and notice here we've got no divergence, got a little bit of divergence setting up, not yet here, but you can see once again how we can get conflicted by the different time frames. Traders, trade with the trend. So as Dave from Seattle says, just stick with the trend trades. Don't consider the CT trades. I love the CT trades, but you're gonna have more stockouts, okay? You'll come out in front in the long run, but if you wanna minimize the stress, stick with your trend trades. Now, back to the 1 on the ES. Okay, so we're short just here. We're coming down. What are we expecting just here? There it is there, a pivot bounce. Now, when I look at this pivot bounce just here, let me just see exactly where that is. And here's what I'm looking at. Do I have divergence? Well, I do, but notice how high that is. So that is actually just there, an ABC. There was your divergence to go long just there. This is actually like a little ABC at that stage. And that is that point, where is that? Back here. So you had a little ABC. Now you've got a bigger picture ABC, but note how I haven't marked it up. Why? Because you may not have picked it at the time. It's not a plain vanilla. But price now rallies up. We hit the 200. And this is where, look, I'm gonna say this. I don't want to hear, and traders will sometimes say, it's okay to look back like this. Yes, I'm looking back because you've got to know what to look for. But traders, the step, we rally up. Have we hit the major EMA? Yes. Do I get a red candle? Yes. Get ready. Do I get a second red candle? Yes. Get set. Do I get a third, and does it close? Yes. Go. Well, a couple of additional things. Do I have a trend? Yes. Where's my entry? The close of a third, open of a fourth. And sorry, I don't want to sound rude when I say that, but traders, these particularly on the Renko are very easy to pick, okay? They really are. You're looking for your first candle, then your second, then your third. My stop goes above, and I'm in on the close of a third, in on the fourth. Now, where's my target? My target would be to take out this swing low, hit the pivot. Okay, my stop is above here. Okay, that's not good. Well, we're coming down. Remember, we're well and truly above. We're coming down. If you're using the 8 EMA, you're still in it. Still in it. Now, we're about to hit the pivot, the floor pivot. So what are we thinking? Now, let's just look at this. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you're down 10. So you're down at this stage $25. No, well, you're up. Sorry, you're up $25. Pull your stop right in. We are at the floor pivot. This is really good. You're through the pivot. Now you get your first signal, and you would be out at that pivot. You may not even choose to give that much back. Okay, now here I looked down, and I've got no divergence here. Now I've got to have to do this because I've got to see whether I get divergence. Note here I've got no divergence, and even if I did have divergence, I don't have three higher closes. We look over at our anchor chart where we are just there. No divergence, no divergence. Okay, what about from there to there? That's too far, traders. Okay, so here we've got no divergence. We then move on there. Could you trade that rule of one? You could, certainly. You know what I'd look at is the speed of the market. Okay, if you've got plenty of time, where could we enter? You can enter using a rule of one or a slingshot. Remember, a slingshot is we're oversold, we then hook back over. These are simple trading patterns here. Now, if you use a rule of one where you run on the first candle, your risk is only $12.50. You go 5 steps and you're on a one-to-one basis, your risk reward. Okay, thank you very much. Now we come down here. Okay, now finally I get a T19. Is that all it is? Let me just see this. Is that it? Just want to make sure. Yep, that's all we get. We've got a T19. Now our entry there is, and why is this a T19? Look, we could see how we got a lower low. That's, look, maybe look, that's too far for me, but some traders might say, well, look, we've got divergence here as well. Okay, so there, I'm thinking I'd bounce off either the 34 or the floor pivot if we take this. Remember, my risk there is $17.50. Now, if I go for 5 steps, it's only, what is it, $12.50. So let's go for 5, and I think we go any further. 1, 2, 3, 4, 5, 6. Well, there you go. You're getting your pivot bounce. Remember, your pivots are your magnets. Now, traders, because this is a T19, and because many of you are not going to be taking these counter trend trades, are you? Remember, when you've got a T19, what are you looking for? Straight after. You are expecting a 34B straight after. So there you could enter on your first candle, pull back to your 34, or if you want to make sure it's sloping, you wait for, which I do, and recommend you do, you wait for the super scalper. T19s, expect the 34B, okay, and bang, thank you very much. Now we come down to here, and why is this a 1D? Let's just see here. There it is, right there. So there I've got on my anchor chart 1, see how it's hooked up? And we could, once again, you might say, well, look, there it is there as well, but definitely here, we've got a 1D. Now, when I've got a 1D, where is my target? We know we're gonna be targeting the 89 EMA is our target. So let's just see how we go. 34B. Okay, so here we come up, there's my 89, and now I've got a 2BD, and I must turn into a loss. Okay, so I've got there, that is a 2BD, and as we know, it's a lower probability trade. Now, many of our 2BDs, and I've now got a new higher high. Now, I haven't taken out this high, but I have taken out that high, okay? So if you're gonna take your trade there, you would have been stopped on that one, but if you're still in that trade, okay, you wouldn't have been stopped until over here. Remember your time. So let's just discuss this. What's our philosophy here? If we had have entered this, which I've got to tell you, I would have taken that as a short. Okay, I probably almost certainly would have taken that one. Now, see how you then had an opposite signal there. As you know, I don't like to stop and reverse. Okay, it's so easy to stop that only to see it come back again. But see down here, come down 1, 2, 3, and now it turned. Now might be a good time to consider getting out and taking a haircut out of that trade. But these are always going to be your difficult ones because here the EMAs are coming together. And this sort of forms then a little sort of ABC. Let's just see this, we can see this pattern here. Okay, we then go up, and what am I expecting up here? I'm looking for a higher, I'm looking for a bounce just there, by the way, that's what I'm looking at. So I've come up to the pivot. Look at the trend, traders. Now, look at this here. On your anchor chart, that's what you're looking at. Note here how now the 89 is crossed under the 200. Did I upload that? I don't think I have. What I've started, and I think I might have shown you this once before, but I've been working on this for you. I dated this yesterday, as you can see. A PowerPoint here, just on what we're looking for, the exact syntax we're looking for when we're looking for a start of a fanning. This is an updated one. There's a couple of additional slides in here. So I might have shown you this some weeks ago. Okay, so we're gonna cover this in coming days. Just what we're looking for the start of a fanning. I'll explain this, a major breakout after consolidation. And this is what we call, the word syntax means the order of things. For an example, just here, what are we looking at? Well, there you can see you've basically got a little ABC, more obvious on your anchor chart 1. But note over here that your 21 has now crossed above the 34. Note how your 8 is above. Note here also it's after major angulation. Okay, so we're starting to get a change in market direction. Over here, we're getting lower highs and lower lows. Gee, that print's a bit big. So I've got an ABC there, lower high, a new lower high, a third lower high. So what is that telling us? Almost probably I'm getting a change in market direction. Look at your anchor chart 2. Notice the rejection off the higher time frame just there you've got. Okay, so we will cover that in more detail, but I think I've uploaded a smaller version some time ago. But what we've got here is that exact same pattern here. Now, what about this over here? Well, we can see here the 21 sort of fluffs around, but now we've had our T20. We can now see that the 21 has crossed through, okay? That could be the start of a new trend, except look at this here. Look at your EMAs. So remember, we always want to be thinking, what is the bias of the higher time frame? What's the trend bias? The 89's crossed under. The 21 has now crossed under. Now is the time on this one, and we don't know what happens here, we consider going for a larger target. Why? See how we're bouncing off the 21? See the trend on the 89. And this is where when you go for your larger targets here, and so I've got a pullback here, is it covers any little, your stop outs, okay? It can cover your commissions. Now, there's our bounce off there. Now, what about this one? So that's a clear-cut 2B. Remember, your 2Bs are your best. Why is that a 2B just there? We've basically tagged the 21 just here. That's a 2B. That was a 2B I would have been stopped on. See how I tagged the 21, almost a 34? It is after strong angulation, so high risk. But now, why is that a 2B? It's actually a 3B. I've hit the downtrending 200, a downtrending 89, and a 34. All 3 time frames are trending down. Okay, now this one here, what is that? This is also, let me just show you this here. Well, it's almost And so technically it's not a 2B. We haven't quite touched it, but it is a 34B. Why is that a 34B? Look at this here. The 34 is under. We can see here. The 21 is under. Okay, oh, and sorry, all right, let's just quickly look at this. All right, so there is, okay, there's that stop out, and there is a 2D. Now, why is that a 2D? Remember, this is on your lowest time frame, okay, which means it does bring more noise. Okay, but the reason is you've got, the reason it's a 2D, here is my divergence, just here, and I have divergence over here. Now, being a 2D, I should be coming down and hitting the 89. That would be my target, to come down and tag the 89. We can see over here, I've got the super scalper here setting up, right? So the 89 is going to be around this sort of 34. Divergence, divergence. One of the challenges, of course, is when you take your divergence trades, and I don't want to sound like a broken record, we at times then miss out on the trend trades. Traders, it is on the hour, and because I do have a couple more sessions this week with you, I will finish up right now. So as usual, we've covered a lot of information. Just keep an eye on this one. I'm expecting to come down and hit the 89. We shall see. So I hope you've picked some information up. So all of the handouts in today were in last week's session 5. And tomorrow, we are going to be looking at Ricardo's rules for trading my 34B and the T25. We will look at this tomorrow. And this was specifically put together for trading volume or tick charts. Okay, particularly this is the 350 tick. What I did want to show you on that was this. When you look at, this is on the micro ES. This is a 233 share. This is a 144 tick. And this is a 1-point Renko. And what you can see, traders, is there's very little difference in those three in the way they're set up. Okay, the 350 volume can work really well on CL, but we'll look at more of that tomorrow. So traders, with that, we'll finish up. I'll see you all tomorrow. Thanks very much. Have a good evening.